Welcome to the Cryptocurrently podcast. My name is Pete Dobson, your host, and we are coming at you live from like a couple hours ago. Good God, have you guys been seeing quantum? It's up like 400% in a week. I'd say that's a pretty good return. A lot of opportunities going on in the market right now, in the cryptocurrency market. If you pull up coinmarketcap.com, the green numbers, those are ones that are up, and the red ones are the ones that are down, and pretty much everything is green. I like that. Now, there is a lot of opportunity in trading currencies, and in this new market, this new Wild West market of cryptocurrencies, tons of opportunity. Now, if you do not have a strategy, you're going to bad things are going to happen. All right, even if you have a bad strategy, that's better than no strategy at all. And the reason I bring that up is, we're looking at these markets, and you might think like, oh God, I missed it. Quantum 400% a week. I could have put 10 grand on it, or I could have put $20 on it. I missed it. Whatever. Well, that's done now. And now going forward, you're going to need a strategy. And if you're going to have a strategy in this market, there's a few things that need to be abundantly clear to everyone, and that is the meaning of words. All right. And the reason I'm bringing this up is, listen, I'm a consumer of news. All right. I'm tuned into people's YouTube channels. I'm reading blogs, news articles, and I'm watching these things move on a moment by moment basis. And I'm hearing a lot of garbage. I'm hearing a lot of people talking about things that they know nothing about. And the problem with that is that we as listeners, the people that are consuming this information, the tendency is to believe people that are pretending to be experts. This is a problem. Let me give you an example of why the meaning of words as it applies to strategy is important. As you all know, the Chicago Board of Trade has opened up futures contracts on Bitcoin. All right, the contract, I tell you the truth, I don't like how it's set up right now. The contract size I don't understand it. Why they would set it so, but that's neither here nor there. But let's say you decide you want to go into the futures market because there's the opportunity to benefit from leveraging, right? And you don't actually have to buy a full Bitcoin. Let's say Bitcoin's at 20,000, it's almost there, but you don't have to put up 20,000. You just have to put up the amount to open up a contract, which I believe is in the neighborhood of $1,400. Now, let's say you open up a position and you go long, right? That means that you're opening up a futures contract saying, I'm going to buy it low, and I hope that the price goes up, at which point I'm going to sell, I'm going to make some money, right? That's called going long. Now, if you do that, and let's say everything goes your way, right? You buy it at 18,000 or whatever, and it jumps up to 100,000, and you're thinking, great, I just made a whole bunch of money, and I want to now sell my contract. All right, so you go to the market and you put in a sell order. This is where it gets dicey. If you do not specify that you want to sell to close a position, then when you go to sell, if that distinction is not made, then what you are doing is you are opening up a completely different contract, which is called shorting the market. That's where you're saying you want to sell in the future, and you're hoping that the price goes down. Shorting the market tends to boggle the minds of a lot of people, and I'm going to do a segment in the next couple of days on what shorting the market really is and how that works and how to make make sense in your mind. But if you go to sell your contract and you don't make the distinction, and you open up a new contract, which is shorting the market, that means if that price on that commodity, in this case Bitcoin, if that continues to go up, the more it goes up, the more money you lose, and you will be obligated to pay if the market says, okay, you're past your margin requirement and now you owe us money. And let me make this very clear to you that the importance of words in this case. If you do not make that distinction and it goes against you, and you go past your margin requirement and you end up owing the market money, guess what's going to happen? The very next day, you will have an armed representative of Western Union and the United States Post Office there to collect their money. There's no getting out of it, because just like student loans and tax debt and child support, that is a debt that must be repaid. So, and you might think that I'm being a little bit over the top on this example. No. As a futures and options trader, on behalf of my clients, this is something I have seen before. Not my clients, of course, but I've seen this happen to people. It's not good. And if you're not clear on the meanings of these words, bad stuff will happen. So let me take this a little bit further, back to all these talking heads and people. I just saw a YouTube, I guess it's a YouTube channel, a couple of 18-year-old kids talking about investing in cryptocurrencies. All right, now this is what I'm ultimately getting at. All right, you are not investing in cryptocurrencies. All right, you are speculating. Okay, you are assuming a great deal of risk in hopes that you receive a great deal of reward. That's speculative. And in my opinion, speculation is way more sexier than investment. At the same time, you need to be conservative in the amount of your portfolio that you have dedicated to speculation. All right. Now, an investment is something where your mindset for an investment has to be, okay, how much money do I want to make, and for how long? When you're speculating, your mindset has to be, how much money can I afford to lose? All right, because when you're speculating, the odds of you losing are very high. All right, and you need to be able to weather that. Also, it's if you're speculating and you think you're an investor, when things go wrong on you, you're not going to know what to do. Your mind isn't going to be right, and your lack of planning and lack of mindset is going to end up hurting you if you're not clear. So if you're speculating, and that's what's in your head, like, okay, I'm going to speculate. I'm going to go on and I'm going to find, let's see, there's this, there's a cryptocurrency called Tron, and it's trading at just a hair under 50 cents per coin. Now you might think, okay, and by the way, it's up almost 16% today. But you might think, well, I'm just going to buy that because it's, it's 50 cents. And I can put $100 on it and just wait to see what happens. All right. If you do that, or say it's $1,000, or say it's $10,000, but if you do that, it's going to be clear in your mind, like, I don't really have a reason to buy this other than it's cheap and I can get more of it for my dollar. Even if that's your only reason, that's still better than no reason at all, or because somebody hyped it up to you on the internet and you don't really know. You've not done your own research. But let's say you put $100 on it and it goes to 5 cents per token. Okay, well, you lost, and you might as well not even sell out of it, because you're going to take that loss. If you lose that money, you went into it thinking like, okay, I can afford to lose this money. So when it happens, it's not going to kill you. If you go into it thinking that you're an investor, right, that you're investing in this company and you're making wise decisions and you're going to make all this money, when it doesn't happen, your brain is going to have a hard time accepting that, and then you're going to get the bug. All right, you're going to get the gambling bug, and that's where things go awful sideways on you. So, terminology. This is very important. You're speculating. You're not investing. A good example of investing in cryptocurrencies would be like if you're one of these people who's buying up all this computer equipment so that you can have the processing power to mine, Bitcoin or Ethereum or, Ripple did really well the last few days. That would be an investment, right? You're buying equipment, you own it. If things go wrong, you can sell it, right? But when you're just buying tokens in hopes that the value of that token goes up in the short term or even the midterm, then you're not investing, you are speculating. And that, making that distinction clear in your mind, it will help you. Now listen, just one real quick thought on this. I'm not trying to be a Dbag here, all right? I'm not, like if you go to, say you go to the coffee shop in the morning, right? You order your coffee, you wait in line, you go down to the end of the bar, the barista hands it to you. And you want to be polite, so you look at his little name tag and it says Steven on it. So you, in your effort to practice good etiquette, you say, "Oh, thank you, Steven." And Steven turns to you and says, "It's pronounced Stefan." Okay, well that guy's a D-bag, all right? Correcting people's speech like that, you're a D-bag. And I understand, like, if you make a bunch of money on cryptocurrencies and they say, "Hey man, I noticed that you're driving a Range Rover this week, and last week you were driving a Suzuki Samurai. Like, what happened?" And you say, "Well, I invested in cryptocurrencies." Well, that's fine. That's fine to say that because it's an easily accessible word that you can use and that people will understand. What I'm talking about is you understanding the words in your mind. And here's where it becomes important, is that when you're listening to me or you're listening to the two 18-year-old kids that I saw on YouTube or the other people that are out there, and listen, there is a lot of bad information. There's also a lot of good information going on. I'm not knocking them. I don't know anything about them. I just saw about 3 minutes of their YouTube video and turned it off. But if you want to use that word to explain yourself to other people, that's great. But in your own mind, you need to know what you're doing. And I'm going to leave you with a quick little story of why it's important to know what you're doing and staying away from things where you don't know what you're doing, and staying away from people who are using a lot of words to say nothing. They don't know what they're talking about. All right, things like using the word investment when speculate or trading is needed. Now, quick story, and I'm gonna let you go here. One of the biggest investment firms in the United States is a firm called Smith Barney. All right, now if you're a millennial, that name might not resonate with you, but if you're older than, I would say 30, you've heard that name before. Even if you heard Smith Barney on the Dave Chappelle show when they were doing the Wu-Tang Financial commercial comedy skit. Smith Barney was founded in 1873. They were one of the most stable, trusted, respected, largest firms in the United States, right? I'm telling you this story because I was actually on this particular trade. I'll tell you the moral of the story is Smith Barney isn't around anymore, and I'm going to tell you how that happened because I watched it happen in real time. The reason why Smith Barney is no longer around is because they got involved in a currency trade, just like what you're doing, right? You're buying cryptocurrencies and hoping that you're going to make some money. This is exactly what Smith Barney did, and it cost them their entire legacy. So there's the hook. In 1998, there were a few things happening in the world. The Russian economy was just in the tank, right? We defeated communism, and Russia was like an emerging market, and unfortunately, all the gangsters moved in and moved into political power. And at the same time, the second largest economy in the world, Japan, had been in the tank for over a decade. They were really struggling. There was a lot of bad stuff happening in Japan. Mitsubishi, for example, it had been found out that Mitsubishi was keeping a double set of books, and then it came to light that almost every major company in Japan was doing the same thing, having one books for the investors and another set of books for themselves, so that they could keep their eye on the truth. That's bad policy. So Japan was in the tank. Now, this is important because that's the second largest economy in the world. So if Japan sneezes, then America's going to get a cold. All right, just like if something bad happens to Bitcoin, Ethereum is going to feel it, either for the good or for the bad. But that's how it works. These things, economies, they're all tied together. So Japan had been in the tank for years, and the yen, the Japanese yen, that's their currency, was at an all-time low. It was horrible. And I was a currency trader, and that year we traded Japanese yen almost exclusively. It was making us a ton of money. It was making our clients a ton of money. It just kept falling and falling and falling. And the ruble was kind of staying stagnant, but Russia was really having a hard time getting off of its feet. And then what happened was Germany came to Russia and they said, look, you guys owe us a bunch of money, and we want you to pay us our money, or else you're going to look pretty bad to the rest of the world. The International Monetary Fund got involved, and they said, look, Russia, we've given you some money before, and we're thinking about giving you a stimulus package of $20 billion. We just want to give you this money so that you can put it into your economy, and then you can, join the rest of the free world in trading your goods and services to the rest of us, and, become part of the show. Smith Barney saw this, right? They saw that there was a almost guarantee that Russia was going to take delivery $20 billion and get just an injection of wealth and stability. So what they did is they went over to Japan and they borrowed a ton of Japanese yen because it was cheap, right? The yen was at an all-time low. Well, not all-time low. It had been lower right after the Second World War, but it was very low, and so they could borrow it real cheap. And so what they did was they took that yen and they drove up to Russia and they bought ruble, right? Because the ruble was about to skyrocket when they got this $20 billion. So Smith Barney pretty much bet the whole farm on the ruble. They borrowed yen, bought ruble. And then the International Monetary Fund, they said, hey, you know what, Russia? Tell you the truth, the last time we gave you guys money, you blew it all on coke and whores. So I'll tell you what, we're going to take this $20 billion, we're going to send it to Japan, right? So the yen skyrockets. Now keep in mind, they borrowed a bunch of cheap yen and they have to pay it back. Smith Barney has to pay back yen at whatever the current price is, right? So when they skyrocketed, that means they have to pay a lot more back to satisfy the debt. On top of that, you would think, well, they still have the ruble, right? Well, they sure did. They had all this ruble that they bought with that yen, and because they owed Germany so much money, what they did as a way to satisfy that debt is they said, I'll tell you what, Germany, we're going to pay you back everything that we owe you, like tomorrow. Just give us a few minutes to print up some money. So Russia They printed up all this money and they completely pulled the plug on the ruble. So the ruble just dove, right? So now Smith Barney is holding a bunch of ruble in their hands that is worthless. And they have a bunch of debt that they just accrued from the yen that is completely out of reach for paying it back. And that is why Smith Barney is no longer in business. They took a big risk, right? And they put too much on the farm, and because they were not wise in their choices, it cost them their legacy. So, investing, speculating, or trading, okay? You're not an investor, you're a speculator. Be proud of that. Tell people that. What are you doing? I'm speculating on cryptocurrencies. It just sounds sexier. But don't get it twisted in your mind. Take advantage of what's going on in the market right now. There's a bunch of opportunity. Just be clear in your mind what you are doing and take your strategy from there. I'll talk to you tomorrow.